Folks, you know I always warn you when something weird is going on with one of the Wall Street companies and with their coverage of NIO. So I was preparing my analysis for NIO for this video, and part of the analysis is actually going on and seeing whether the price target of NIO changed with one of the big Wall Street companies. And to be honest, I'm not even sure how they set these prices, so I never look at the price as the kind of unit of data. I'm looking at the trend of these prices. And something really weird was going on there with the prices of HSBC. So HSBC just now slashed their target prices by 38% for NIO. I want to remind you, 3 months ago, in October, HSBC raised their price target from $4.1 per share to $7.8 per share. The price of NIO stock at this day was $7.5 per share, so basically their target price was a little bit more than the price itself. Right now, this week, they have slashed the target price by 38%. And this is actually a big deal, and this pisses me off by a lot because, well, you and I, guys, we kind of know something about investing, but there are a bunch of people who actually listen to the advice of sell-side analysts at the big companies like HSBC. So imagine that you are investing a bunch of money and suddenly this analyst comes to you and he's like, hey, I slashed my target prices by 38%, by almost 40%. And you would probably be very puzzled, like what the hell happened to the company? Did their plant burn down? Did they not deliver overpriced humanoid robot which they are promising every quarter? Or was it some other EV company? No, actually what had happened, they slashed the price target to $4.8 per share, and you already know why they set the price target at $4.8 per share, because current price of NIO is $4.7 per share. So once again, HSBC had set their price target at a little bit higher than the actual price right now. Hello and welcome to the Market Monkeys channel. My name is Vadim. Today we are talking about NIO. You already know that. Now, before we begin, two things. First of all, if you are subscribing in the middle of this video, it really boosts the video for everyone else on YouTube. And if you are already subscribed, hitting that like button will help us a lot and will help boosting this video so that more people will see video about NIO. So after the whole HSBC saga, I just want to say that there is one more company, Macquarie, who actually rated NIO stock as a buy with a price target of $6.1 per share, and that's it. I'm not going to talk about this anymore. We're not gonna discuss what the analyst wrote there. All of you guys who are investors of NIO, you already know that 6.1 is like, okay, it's higher than it is right now, but I think all of you would be really pissed if the price for NIO in 2026, the maximum price would be $6 per share. So this is the bare minimum. That's it. That's it for the discussion of Wall Street. Now let's talk about company and let's talk about their business. So 2025 is over and we were promised profitability, and we will discover whether NIO became profitable in March when they are going to announce their Q4 results and the results for the whole year, right? Well, not really, because NIO CEO, of course, is going to drop hints left and right. By the way, I'm not even kind of sure how legal it is to drop hints like that before kind of the official announcement of the results. So in the internal call this week, he said that do the math and you will see profitability is achievable. Now, this person already obviously knows the answer to the question whether his company is profitable in 2025 or not. So I'm not gonna go into the whole cryptic, let's decrypt the body language of William Li. And to be honest, I don't think it's very interesting to discuss whether NIO will have like $0 in the net profit category for Q4 for 2025. But this information is actually very important to some of the people, so just so you know, it was on the news. The more interesting thing is that we finally have a guidance for NIO for 2026. Again, I'm not really sure why we are getting all of this information from some internal conversation, some meeting with NIO employees and some weird stuff like that, and not from kind of official earnings review in March when NIO will discuss kind of their 2025 and plans for 2026. Anyway, we have guidance for deliveries for 2026, and the deliveries are planned to be between 456k and 489k vehicles for 2026, which indicates a growth of between 40 and 50%. And I have to say, thank God for that. Finally, NIO shows some signs of maturity. If you've been on this channel a year ago, you probably remember I went ballistic when it was announced that NIO delivered 220,000 vehicles. We are going to deliver twice that. Like, it was a stupid goal, it was not achievable. I said that a year ago, and this year's goal is actually much, much better, because in order to achieve that, the company needs to just deliver what they have been delivering for the past 3 months. Yes, past 3 months were great. There were record-breaking in terms of NIO's delivery, and the company is really in a good period right now in terms of profitability, delivery, the models that they're selling. So for example, ES8 sold their 50,000th vehicle this week, 19 days after the 40,000, and if you remember, there was something like 11 days or something like that between 30,000 and 40. So they are selling a lot, and this is a good period for NIO, and this is a good goal for NIO. One of my biggest critiques of William Li and the whole management of Li was that they are a publicly traded company. The goal of C-level management is to manage the expectation of the investors, of analysts, of Wall Street, and finally they are starting to do just that. By the way, if you found this information valuable, interesting, press a like button. Don't forget to subscribe to our channel. You can super thank us using the super thanks, and you can become a member of the Market Monkeys channel. Now we have to talk about the obstacles, because there are a couple of obstacles for NIO, and the biggest one is the Chinese EV market itself, because there is just a mess going on right now. So first of all, Chinese regulators summoned heads of 17 car making companies, and there is this whole mess that we've seen in June with the price wars. Just to remind you, in June BYD started the price wars, and it just went into really bad direction when all of the companies started slashing prices, and suddenly the whole Chinese EV sector, which is very difficult as it is, just became insane, and the Chinese regulator needed to step in. Right now, the same thing, but this time BMW slashed the prices on 30 of their models, and this triggered SAIC Motors, GAC, Chery and Leapmotor to roll out subsidies. BYD immediately started offering some of the features which were you had to pay for them, so they started to offer them for free, and Tesla immediately started to offer to finance your vehicle for 5 years with no interest, which is kind of interesting. So basically, regulator again had to step in and tell them to cut this and to stop doing this. As NIO investors, you are probably rooting for the regulators here and not for Chinese folks, but yeah, let's see how this all rolls out. Another problem with the Chinese market is that the sales of EVs, the overall sales of EVs in China, are down 38% first 2 weeks in January. And the reasons are, first of all, because finally there is a vehicle tax on EVs in China. So how it works? In China, if you buy a car, you pay additional 10% tax on this vehicle. So for example, the car company gets 100,000 whatever dollars, and you have to pay 110,000. 10K goes to the government. EVs were always exempt from this tax. Starting 2026, EVs are getting taxed and getting taxed 5%. So basically you have EVs being 5% more expensive, so price goes up, demand goes down. The second problem is with the subsidies. So it was announced that 2026 Chinese will have the same trade-in subsidies. You are bringing your old gas car, you get trade-in subsidy for a new EV. But this budget that was allocated for these subsidies, it was dispersed to the local provinces and local cities, but it hasn't been applied yet because each province kind of decides for themselves how much they are giving the subsidy and when and whatever, and it hasn't been done yet. So sales are pretty bad in January. Why am I telling you this? Because I'm kind of warning you that the delivery numbers for NIO in January, they will be bad and you have to be ready for that. Now, we're running out of time, so we haven't even talked about Canada and US. So there is a good possibility that Chinese companies will start selling in Canada because Canada right now is working on the trade deal with China. And in US, suddenly, amazingly, two things happened. First of all, people started realizing that even with all of the tariffs, Chinese EVs, so BYD for example, is cheaper and more advanced than Tesla, Rivian, Lucid in US. So even with all of the tariffs, maybe it's kind of better to bring BYDs. And second of all, Geely actually started playing the game of Donald Trump, and they told that they are considering opening a plant in US and starting to produce their vehicles in US, and they said that they are going to announce pretty soon their US strategies for the next couple of years. So both of these developments are really interesting, and of course they are going to influence what is happening with NIO stock. Hopefully this information was interesting for you. If it was, like and your comment is the best way to thank us. Subscribe to this channel and we will see you in the next video. Take care.